Hello, traders. It is 8:01 a.m. Chicago time on Wednesday, the 12th of February, 2020. Thanks for joining me on episode number 1691. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a market that is moving higher on risk on sentiment following uh, the down close yesterday. Of course, yesterday closed above the prior day's close, so overall a higher close, but it did sell off of the very key level at 74.50, which I discussed yesterday. But now it's shifting up. It's trading at the upper end of the range in the S&P. Crude oil is leading the pack, up 2%. Crude is up $1.06 at $51 on the March contract, following the OPEC report. And the DAX follows up 103 points. The Russell's up 9.1 points, or about half a percent. Same with the NASDAQ. The S&P is up 14 and a half points, or 0.43%. The laggard today, again, is the U.S. Treasury bond, down 18 ticks on the futures price. The Treasury, the 10-year note is down 7.5 ticks. So that's where we stand this morning. Other than that, let's take a look at what's on deck for today in terms of the calendar. Today, we do have the key piece today is, of course, Fed's Chair Powell continues a testimony to Congress. And then we have crude oil inventories at 10:30. Powell's testimony again is at 10 o'clock Eastern. And Fed's Harkers is speaking currently, has been speaking for the last half hour. And then we get the monthly budget statement at 2 p.m. Eastern for the United States, and that's about it. Not much on the calendar today. Let's hop right in and take a look at what we looked for yesterday. Yesterday, um, just off basically on all scenarios. Um, it happens. Uh, and the key level above is marked there is 74.75, with a strong potential for a push into that number. That's what I expected. I did not see it turning over and pushing back down into the range. So it was a combination of a bunch of things. So that's where we stood yesterday. It was a very well structured day yesterday. It traded right around the key areas that I pre-designated in the form of the stock zones, um, and held up pretty well. So the key pushes, it opens right in the 66 stock zone, moves into the overnight point of control at 60.50, I believe, somewhere around there. Pushes back up with an impulse and squeezes into 74.50 again. 74.50 had a measured move. Target had not only one measured move, it had about four measured moves on top of each other in that area, projecting different time frames. And then once it fell through, it pulled right back to that 66 area, consolidated, tried to squeeze through into 69 and a quarter, fell back off, held at 61-ish, and then went right to the closing price of the prior day. That's the orange line here. Um, and then consolidated. We ended up with a neutral down day, a neutral down day. I'd like to call it a neutral extreme, but we didn't really extend that far down. Pretty bearish close yesterday. And today we are trading right up in here, right up in here, right up against the overnight high, which is only a point below yesterday's high. The market is not giving up. The buyers are not giving up any territory whatsoever. It just isn't interested in any selling still. And so we, overall, from an auction perspective, patterns, whatever, yesterday was a pretty clear back and forth. Good rotations. If you look at the rotation pane, you'll see that there are good rotations up and down throughout the day. One thing I did notice yesterday that I discussed in the Convergent Trade Talk session yesterday afternoon is as the market was pushing up right here in price, the large lot and very large lot participants were sellers. And then once it fell back through the open in this area, you can see that the very large lots were flat, the yellow line. These are 100 lots or better. And then as it carried on to sell off, the very large lots continued to sell off a little bit. The candlesticks you see here are the net delta, and the run up was held up, looks like by small participation. These are 9 lots or less, and this is on a consolidated feed. This is a consolidated tape feed, so the trades are being reconstructed by the data feed, by the software given the data feed, the tick ID. So it's I believe it's very accurate. And so as the market pushed below and went below the open, it had already been far below it in delta. To me, that was one of the things that signaled weakness. Not to mention the fact that we generally don't go into a trend despite the way it opened. We generally don't go into a trend the day after a trend. It has done so several times in the last year, which is very, very uncommon, but we don't expect the market to continue running. That carries us into the overnight session, and all that's done in the overnight session is to just push up, um, and continue to squeeze. And what we have again is the same thing as we did the night before. We have a P-shaped profile with multiple distributions, with the point of control near the upper end of the range. The market's trading near the high end right here at 73 and a quarter. It's not backing off, and to me, it looks like the 74.50 is vulnerable. By the way, the 74.50 is a local double top. It's not a bona fide double top statistically speaking, but it is a double top at the high locally. It did not fall off immediately. It actually tested 74.50, came back, tested 74.50 again before it fell off, and here we are back. We're above the mid, above VWAP, around the point of control. Really a bullish overall perspective. 219,000 contracts traded, a little under 2 times the normal or the expected volume. Delta is positive, and the overnight inventory is almost 100% on the buy side to the longs. So that's where that stands. Let's take another perspective again and look at this composite chart. Each bar here represents an RTH or a day session, pit session period, and you could see that we are solidly bullish still. I would caution shorts today. The pullback yesterday probably sucked in plenty of shorts to help to squeeze higher today, and so I expect it to continue to push up and make new all-time highs as it continues. Okay, so that's the overall preview. I've got an issue with my book map, so I cannot show that today, but we're going to go dive right into what's expected for today and keep this nice and short and sweet for you. This morning, expectation is for an open auction in range out of value and a squeeze 74. I expect it to blow right through, squeeze up into the next area up. In fact, let me redo that. Squeeze up, push the high, pull back, and then start to walk itself, grind up into this 84 region, consolidate, fall off into the close. Expecting a tightish range today. I'm looking for about 12 points, and a continued push higher as the market pushes higher volume and the overall range and volatility kind of collapse. Secondary, open, squeeze up, impulse down, consolidate at the overnight point of control, and then push into this 66 area for the point of control, and then come back up and hold steady into the session. So we'll have our higher high, higher low, but we'll hold somewhere in the range. Given the way the market has traded recently, the third scenario is likely to squeeze down, balance the overnight inventory against the 71 area, and then impulse up, consolidate, push into the 84, and then continue to squeeze to some point no man's land here higher. So my preference, of course, is the sell side, not because I have a short bias, but because that's what provides better opportunity given the way the market's loaded right now. It's a buy and hold market. It's a strong bull market, and everybody out there is buying stock and making money, just like they did in 1999, early 2000, and through the bubble period, late 2006 into 2007. I see a lot of indications of complacency, but it doesn't mean that it's done. It's done when it's done. But I do see that a move down, a strong move down, is likely to give us some extraordinary volatility, which to me personally spells opportunity. I know it's not for everyone, but that's what I'm looking at. I refute the argument for sell-offs because I don't see any indication of that. The market is very, very clear and loud about the fact that every time it sells off, it shoots right back up. The buyers see every sell-off as a bargain shopping opportunity, and until that ceases to exist, there is no point dreaming about a sell-off and how the market's inflated and so on. The Fed's still supporting the market very heavily. Billions and billions and billions of dollars being poured into the markets and going into stock buybacks, and the only place to deploy capital for a decent return is the stock market. So it continues. Okay. So that's where we stand today. Good luck, and I'll catch you tomorrow morning. Take care.